The European Central Bank may be poised to take decisive action against low inflation rates.
And where exactly
Ahead of a meeting in June, its president has warned that the body will not allow interest rates to remain too low for too long. Combined with credit constraints, the lower rates are seen as a risk to the eurozone's fragile recovery. Euronews spoke to Peter Praet, chief economist of the European Central Bank, ahead of next month's discussions.
Professor Praet, thanks very much for your time. We've had people trained to think about high inflation as a big problem. Now we've got low inflation, it's around that 1% mark. Is that the new normal? And how do you tell people, everyday people, that this is something you need to worry about in the medium term, the long term? How do you view it?
If supply is bigger than demand, so you get some pressure on prices, it's really a sort of barometer that expresses some imbalances on the economy. That's why you should be worried in a symmetric way. If demand is bigger than supply, you get inflation, and on the other hand, you get some deflationary pressures.
If you look at the barometer and the projections from the ECB itself, inflation has surprised you. Is this a whole new normal we don't know how to deal with?
There is weak demand because a lot of households, a lot of companies, a lot of states have high debt, and so they reduce their spending compared to the capacity of the production of the economy. So you get pressure on the pricing system, which are more on the downside, which is a little bit the new environment that we have.
What can be done at this point? Because quite a few economists say things should have been done 2 years ago.
It's a complicated question, but the first thing is to identify what is the cause of this subdued price pressure. What we see today in more recent period is that the slack factor dominates the weaker oil price in the low inflationary picture that we have. Second, I think we cannot say that the ECB didn't intervene. And we know from market behavior that we had episodes of fear, really fear of deflationary pressures. That means that households, market participants didn't know how the ECB would react to some crisis factor. The episode we have now, the context we have now, is a more structural sort of pressure on prices, which is the result of slack in the economy. And so we have been taking an accommodative monetary policy. Monetary policy is the interest rates, close to zero, but also other tools that we have been put in place.
Can we ask, what exactly are the measures that the ECB is planning to do?
Well, I think the Governing Council meeting in this room will discuss, of course, but there are a number of things. You have to see what is the main impairment in the transmission of your monetary policy. And so we have margin on rates, as you know. Interest rates are going to remain low, not only today. Interest rates in the US, the long-term rates have increased in the US because the situation is improving in the US. But we have been able, contrary to the past, to decouple our interest rates from the US. That means that policy remains accommodative. More specifically, of course, there is one of the issues that we have identified very much is a transmission via the lending to smaller firms in general. And so it is indeed true that we are looking at a number of possibilities there. We will see how the discussions go, but we have identified a number of impairments in the transmission of monetary policy, and we are working on these issues.
There's been a conversation about negative rates. Are we looking at a situation where credit slows down even more?
I think you allude to two things. I mean, before we take the decisions, we want really to see what is the real problem we try to address. And that's what we are doing now. Is credit really too weak because of the environment on which you cannot really do much about that? Or is it a specific lending supply of loans from the banking sector in the context, which I explained, where the banks are in the process of cleaning the balance sheets and recapitalization. So we are working on that, but we have identified indeed that the lending channel is something which raises a number of questions about our transmission.
Are we going to now expect low inflation for the medium to long term?
I think the biggest problem, as I see, is that a number of households are revising downwards their long-term expectations about the future. How will our future be? And that leads to a sort of negative expectation trap which is a very delicate
How do you
element.
address that?
Well, it's very difficult because central banks cannot really answer to this question by just printing money or providing liquidity, and it is part of the solution, I think, but it's basically recreating positive expectations about the future, which is job opportunity, which unfortunately is structural reforms, is it's education. All these things are much more important, of course. And it is true that the biggest challenge we have today is to recreate in the public, but that's more a political question, to recreate in a public positive expectations about the future. And that's not what you see today in many countries. It's more disappointment and negative expectations about the future. We are looking, as I say, at some of the aspects, which is basically putting financial conditions, favorable financial conditions, so that when firms decide to invest, they will not have a constraint on the credit side.
Do you see the similarities that many people point out with Japan and Europe now?
No, I mean, I think all the situations are different. There are many differences between. I think one of the similarities in many of the economies, unfortunately, is the debt level that we find. I mean, debt ratios are relatively high. I think that one of the major differences with the Japanese situation is that we are absolutely addressing the banking sector issue now. And also in monetary policy, I think the reaction has been quite forcefully since the beginning of the crisis, which was not always the case in Japan in these years. I think the societies are very, very different. We have a lot of issues related to what we now call design flows in the construction in the euro area. We have to address them. I think and we are doing that, and the banking union is one part of the solution.
Do you find that the mandate of the ECB sometimes holds you back from how much more you could do?
No, I wouldn't say that.
I asked because you mentioned employment as a key thing and structural reform, which is why you wonder.
I think it's very dangerous also to give too many illusions on the public that what creates jobs, what creates wealth is monetary policy. I mean, it's always dangerous also to give too much credit, which is an illusion that monetary policy can solve all the problems. The situation in the US and here has been quite different. As you know, we went in the euro area in a crisis with very weak crisis management institutions, crisis management for banks, for example. And in the US, you didn't have that, I mean, in the US market, and also much more flexible labor markets in the US in general. So we went in a very difficult situation. Now we are starting to get out of this, but a lot of damage has been done. There is a lot of slack in the economy. So there's some price pressures. So it's true that we are not in deflation, but we are in a situation of sort of slow growth, low inflation, and we are not satisfied about that. And we said very clearly that we wanted to address that and respond to that in our mandate.
Mr. Praet, thank you so very much for your time.
Thank you.